branch is a business expansion activity. We had various classifications of branch. We classified the branch into dependent, independent, foreign branch, domestic branch. The first classification we were focusing was dependent, independent. In that first we are discussing on dependent branch. Dependent branch is a branch whose accounts are maintained at head office. Head office maintaining accounts for finding the branch profit, and it maintains accounts under different methods. You got data system, stock and data system, single entry model. Under data system, it prepares a single account called branch account. Various steps in finding profit or loss. It is 7-step approach. Opening balance, closing balance, goods sent, goods returns, cash sent, cash remittance, formalities. Opening stock reserve, closing stock reserve, removal of loading on, net goods sent to branch, gross goods minus returns. Stock and data system. We told you certain concepts. We don't use it of purchase sales. We'll pull all those screens of purchases and sales. We book the profit in an account called branch adjustment. As and when it is not getting sold, we remove the profit. And when it is getting sold, we don't book the profit. At the end of the year, after removing the profit on unsold goods, the difference will transfer to branch P&L, which will be matched with the expenses, and net profit is arrived. We discuss accounting entry, various issues, different combination of problem, 2 branches, 3 branches, 4 branches, like that we discuss several combinations of question. Correct, Amma? Everybody? 4 la 1 la 3 da. Coimbatore, Trivandrum and Bangalore. What is the maximum? That was the maximum number of branches. Goa. Bangalore branch. Goa. In Bangalore branch, answer 13,500. Goa branch 32,500. And the profit was given. Trainer has become very quiet. After training so many people, it has spread up to 4-5 rows. Excellent trainer. Anyway, after that, we discussed the independent branches. The branch that maintain their own accounts. So no special issues arises in case of independent branches, because branch maintain their own accounts. So 2 things we are going to learn. Accounting for transaction that happens between head office and branch, in the books of head office, in the books of branch. Then final accounts. Preparing final accounts of branch separately, head office separately, business as a whole. Understood? In that, we were actually discussing the accounting entries initially. Day-to-day transaction, fixed asset related transaction where accounts are maintained by head office, sometimes accounts maintained by branch. Inter-branch transaction, reconciliation entries, incorporation entries. So first we were focusing on day-to-day transaction. Head office sending goods, returns the goods, cash sent, cash remittance. Customers directly returning goods, customer directly remitting cash. These were all the various other aspects that we discussed. Everybody? We made the entry, debit the receiver, credit what goes out, debit what comes in, credit the giver. As a receiver, what comes? Then giver. As a giver, to whom? Then what? Are you following? Like that we were just we were discussing the basic accounts. And then we discussed about accounting for fixed assets. When the fixed assets accounts of the branch are kept at the head office, then whenever fixed asset comes there physically, we debit branch fixed asset. Whether we buy or they buy or we transfer, we debit branch fixed asset. If we buy, credit cash. If you transfer, credit fixed asset. They buy, credit cash. Depreciation now, if they buy, credit branch. Depreciation means I should reduce fixed asset, but I don't book the expenses. So branch to branch fixed asset. Like that we are making accounting entry. In the books of branch, they won't debit branch fixed asset. But if they spend money, they will debit head office to cash. Expense they will book. Depreciation to head office. Understood? Then branch fixed asset account maintained by branch only. Then branch will record debit fixed asset as and when fixed asset comes here. If they bought, credit head office. They transfer, credit head office. We buy, credit cash. Like that, not simple common sense entries we were making for independent branches. Inter-branch transaction. In the books of head office, it is not with the branch something is happening. Debit the receiver, credit the giver. Debit the receiving branch, credit the supplying branch. What for cash, what for goods, bills, everything we have discussed. Everybody. Thereafter we discuss entries in the books of branch for inter-branch transaction as if it is happening with head office. Reconciliation entries. Why reconciliation required? Because all entries involve head office debiting branch, branch crediting head office. Head office crediting branch, branch debit head office. So when these things simultaneously happen, naturally the amount should be same. Side may be different, but amount should be same. Sometimes it differs because of transit item or certain unrecorded transaction. Understood? So which has to be reconciled in the preparation of financial statements. So before the preparation of financial statements, you have to ensure that the branch account in the books of head office and head office account in the books of branch has to be same. Further, we make reconciliation entries. No sleeping. So we make reconciliation entry. The reconciliation entry in the books of head office, goods in transit, remittance in transit to branch. That time no entry in the books of. But if head office doesn't make entry, then branch will make same entry. Goods in transit, remittance in transit to head office. Incorporation of assets and liability. Assets to branch, branch to liability, branch to profits. Everybody. So these are all the accounting entries we discussed. Then we also discussed solving final accounts for the branch, for the head office and all. Shall we proceed, friends? Now when we prepare the final accounts separately for head office and branch, we have seen what we do. Correct, Appa? Everybody? Goods sent to branch is a revenue for head office. It is a cost for branch. Everybody, please respond, friends. Goods sent to branch is a revenue for, and it is cost for the branch. Understood? Please respond, friends. Now listen. The goods in transit reconciliation entry is made will not come in the trading account. Goods in transit reconciliation entry will not come in the trading account in the books of head office or in the books of branch. Respond. That is only an adjusting entry made to reconcile the head office account and branch account. But that goods in transit will come in the overall financial statements. It will come in the. Why do you say so, sir? Because suppose I sent 5 lakhs, they got 450. I sent, they got. For head office concern, revenue is 5 lakh. For branch concern, cost is 4,50,000 only. Could you appreciate that? But for overall business, somewhere this good should be shown. So for overall business, that should be included in the closing stock. For overall business, it has to be shown in the. So why I am discussing these separately now? When we prepare the head office trading P&L, branch trading P&L and overall trading P&L, we will be showing with the columns head office, branch, total. Head office, branch, total. Could you appreciate that? Please respond, friends. We take opening stock. Everybody of head office, branch, total. Everybody. So we take purchases. Head office, branch, total. Everybody. Then to buy sales. Head office, branch, total. Buy goods sent to branch. Head office. Not for branch. Not for total. It's not a revenue for the business. It is not a revenue for the company. It may be a revenue for, but it is not at all a revenue for company. Please respond, friends. Then two goods sent to branch. Or goods received from head office. Only in, not in the So these transactions happening between head office and branch will come only for head office and branch and not in the total column. That is not at all a transaction. Upon this revenue should be included somewhere. No. These goods you are sent to branch na. Please respond. Branch should have sold these goods. So that is naturally there in the sales of the branch. Understood? So whatever not sold will be there in the closing stock of branch. Understanding? So thereby the goods sent to branch, goods received from head office are all revenue and expense of head office and but not for total business. Understood? So when I present like this, you should not feel total na this plus this. It is not like that. Total column represent financial statement of the company as a whole. In that, this plus this I may not take. Suppose I will write closing stock here, friends. Respond. Closing stock. But I won't record the addition of these two closing stock here because this closing stock at branch is overstated. Closing stock at branch is. Why, sir? Why do you say it is overstated? Because who sent the goods? Head office sent the goods at a profit margin, correct? So naturally that can't be there in the closing stock. Could you appreciate that? So I will remove the stock reserve there. Everybody. Then unrealized profit relating to branch closing stock will be debited in head office column. Will be debited in stock. That will be debited only in, not in the branch, not in total also. Because for business there is nothing called the interbranch transaction. There is nothing called unrealized profit. Could you appreciate that? Now the total should not be misunderstood as head office plus total. Now that is a financial statement presented for the business as a whole. For that, these transactions shall be eliminated. Which transaction? The transaction happening between head office and branch are not at all incomes and expenses. Could you appreciate that? Please respond, friends. So these points you should be knowing for accounting for this particular transactions. Shall we proceed? Everybody? So these points you should be knowing when we prepare trading P&L of head office. Sir, that day we solved a problem so easily because we didn't have what? Total. It was only head office and branch. Correct? Respond. But here we'll have head office, branch and don't try to relate the head office column, branch column with total. Even though many other items will be equal. Many other items will be matching. Sales of head office plus sales of the is the total sales of the business. Understood? That doesn't mean always all items should match. Could you appreciate that? So if you can delink these columns, then this presentation will be simple. Otherwise, we are going to solve this problem. Comprehensive questions on to branch final accounts. Shall we? And you have to put all your mind there and see how it can be done. Correct, Abba? Then maybe after 1 or 2 days you practice it again. Only then you will gain a complete grip over this. Because again when I prepare balance sheet, head office account branch account one item will be there in the asset side. For whom? Head office. For branch, it is head office account one item will be there in there. For overall business, no asset, no liability, no head office account, no branch account. Understood, Appa? So those things are all getting automatically nullified for the overall business balance sheet. Could you appreciate that? So those points you should be knowing. There is nothing called receivable from branch, payable to head office. In case of overall business, company payable to branch, receivable from branch, nothing is there. Is that clear, friends? Anyway, let us, whatever we discuss, let's say discussion subjective, let us put that in numbers and we'll see how well we can do. Correct, Appa? So we have 3 questions, but maybe we can do only 2 questions out of which, and 1 question can be gifted, but before that it will be discussed. Everybody, maybe we can make few computations of that problem. Just presentation part on, I will leave it to you. Understood? That way we'll be completing one branch, independent branch, so that we can immediately start with the foreign branch, which require only 2 hours through AS11 also. Understood? So these are the various discussion we are having. Thereafter, we have departmental accounts. Everybody, we have departmental accounts, friends. Bank, insurance, electricity, buyback, accounting standards. These are all the topics pending. Correct? Buyback, it is a 2.5 hours chapter. And bank, insurance, electricity together around 14 hours will be spending together. And then we have accounting standard, in that the complex standard over. Which was a complex standard? AS 20, that is the biggest standard getting over. Other standards are just one more standard we have completed. 4 also over. 4 also over. Through branch, we will be completing AS 11 also. We will have 6 standards pending. Understood? So close to 6 hours we need for that. So 14 hours plus 6, 20, and then another 2.5 or maybe 3 hours maximum for buyback. Just explaining provision and applying problems. Understood? So around 23 hours we require. 14, 6, 20, 23. 23 department or 6 hours required. 29 hours we require. Everybody before 31st for sure will complete. Correct? 29 hours, around 10 classes we require. Right? Okay, from now on. Shall we? Everybody? You should be knowing the status of the syllabus. For that purpose only conveyed. Understood? Where we are actually standing. It doesn't mean that 25% syllabus is pending. It is actually around 6 to 7% only, because out of 300 to 310 hours, what is pending is this 30 and odd hours only. You should be knowing. Correct? So don't compare it with buyback. We can complete today itself. One chapter is over. Are you following this? So these are all kuti topics. You should not be creating that hype. You when. You should know the syllabus, where you stand. Understood? Later on, check with the study material also. Sir, leaving any chapter or not. Okay, well, please check without fail. Everybody? Okay. Next. Let us now solve the problems. Question number 11, page number 118. A trader commenced business on 1st of January 2014 at a head office and one branch. Purchases were made exclusively by the head office, where the goods were processed before sale. There was no loss or wastage. Only processed goods received from head office were handled by the branch, and these were charged to the branch at processed cost plus 10% at sales, whether by head office or the branch, were at uniform gross profit of 25% on the respective cost. The following trial balance as on 31st December 2014 was extracted from the books. It's only a trader, proprietor, capital given, not share capital, just capital, drawings, purchases, cost of processing, sales, goods sent to the branch, selling expense, debtors, creditors, branch account, head office account, bank balance. The following information is relevant. Goods charged by the head office to branch in December 2014 at rupees 11,000 were not received by the branch until January. A remittance of rupees 43,750 from the branch to head office in December 2014. The necessary adjustment in respect of these items ought to be made in head office books. There is a specific direction given that reconciliation entry to be made in the books of. If that is not given, receiver's point. So we'll analyze who is going to receive, accordingly we'll make. You understand?
Yes, sir.
Apply your mind and read the question. Stock taking at branch disclosed a shortage of rupees 5,000 at selling price. Cost of unprocessed goods at head office as on 31st December 2014 was rupees 1,80,000. You are required to prepare in columnar form the profit and loss account and balance sheet of head office, branch and the business as a whole. So kindly go through the question once again, please. Okay, you're all in deep reading. Let us come back to the discussion. The question is preparing trading P&L and balance sheet of head office, branch and the business. So thereby first what we do, we'll take trading P&L balance sheet. There is no specific format here and all. It's a trading P&L balance sheet. So just like the normal trading P&L, normal balance sheet with separate columns for head office, branch and total. Business means that is nothing but total. Everybody. So first you open trading P&L balance sheet with the columns head office, branch and total in your mind. Have you? Everybody. Now trial balance is given. Takku we can go for posting. Everybody. Normal simple final accounts for trial balance given. 1 or 2 adjustments given. Takkunu prepare final accounts. Correct? In 11, 12 standard people do final accounts with a very big number of items, around 50, 60 items. Here hardly 8 to 9 items. Correct? We'll spend in 5-10 minutes, we'll complete the final accounts. Capital. Visualize friends. Capital. Don't have support and sleep. Okay. Capital. Balance sheet of head office. Capital. Head office column 2,20,000. Branch column nil. Total column 2,20,000. Wow. Drawings. Balance sheet. No yawning. Head office column reduce as well as total column reduce. Purchases. Trading account. Head office column. Branch column nil. Total column. You are posting, huh? Yes, not posting. Cost of processing cost. Trading account. Direct cost. Trading account. Head office column. Branch column nil. Total column. Sales. Trading account credit side. Head office column, branch column, total column. Goods sent to branch. This is implied that is received from head office. Goods sent to branch. Sales. Credit side. Buy goods sent to branch. Head office column. Nil. 2 goods received from head office. Nil. 640, 200. Nil. It won't come in total column. Are you all following? Okay, pa. Then selling expenses. Come to P&L. Head office column, branch column, total column. Debtors, creditors. Go to balance sheet. Asset side, debtors, head office, branch, total. Liability side, creditors. Head office, branch, total. Over. Over. Branch current account, head office current account. Branch current account will be showing in the head office column. Correct? It's a debit item. It's a go to balance sheet. In head office column. Branch. Are you following? Respond. The asset side, branch account. In which column? Head office column. Nil. Then liability side, head office account. Branch column. So if nil, amount nil. Are you following? These amounts will come in head office column and branch column. The incorporation is made only for overall business, not for head office business. Understood? Proceeding. Bank balance. Asset side, head office, branch, total. Everybody, this is very important. One thing what you should do. Whatever amount you show for head office account and branch account should be. It cannot be different. Understood? So see what is the difference. 54,000. 7. 2,05,550. 1,50,800. 54,750. Correct? So which means before you prepare final accounts you should have reconciled. So what is the reason given here? Goods charged by head office, which means sent to the branch. How much? Is still in transit. Similarly, remittance from branch to still not received. Correct, Appa? Totally it is 54,750. Everybody. So these entries will be made in the books of. If nothing was given, one entry I would have made in head office, another entry in the books of branch. 11,000 entry in the books of branch. 43,750 in the books of. But here both the entries I will make in the books of. Why? Given in the question. So in the head office books, goods in transit, remittance in transit, to branch account. So branch account will reduce or increase. Branch will usually show dash balance. Now you are crediting. It will. So 2,05,550 will become 1,50,800, and that amount only you will show in both the balance sheet. Purinchada. Sorry. About that part is over. Takkana point number 1 over. Point 2. Stock taking disclose a shortage of. So this is abnormal loss. It is. So in your trading account, buy abnormal loss, P&L account, 2 abnormal loss. Everybody, whose column? Branch column and total column. Everybody. Cost of unprocessed goods at 31st December 2014. How much? What is this? Closing stock. What is this? Friends, by reading this first problem, by reading the first paragraph, purchases were made exclusively by. Branch will never have any direct purchases where goods were processed before sale. Before sale, you will process the goods. Correct, Abba? What they have given is closing stock of unprocessed goods. Raw material. Abba, finished goods is there or not, I don't know. Are you following? Now listen. There was no loss or wastage. Only processed goods received from were handled by the, and these were charged at blah blah information given. Correct, Appa? Appo, they have not indicated anything about dash goods. Finished which goods? Processed goods. Closing stock is there. Closing stock is there for unprocessed goods, raw material. And closing stock of finished goods not given. Like that beta limited problem only. In this question also, closing stock of head office missing. As well as closing stock of branch is missing. Please respond. You can prove that there is no closing stock. But they have given some margin. Respond. You can easily prove sales is there, purchase is there, cost of processing is there, margin is there. So you can easily prove there is closing stock or there is no closing stock. So thereby you need working note for finding closing stock of processed goods at head office, which may be nil, I don't know. Then closing stock of processed goods at head office. If at all having closing stock of processed goods, then it will have 2 types of goods. What and all? Processed goods and unprocessed goods given in the question. You need to find out only what? Processed goods. Correct? Branch will have only 2 category, 3 category. 1 category. Which category? Processed. It will never have, because they are getting directly only processed goods. Could you appreciate that? Everybody. Now can you apply your mind and tell me the amount of closing stock at head office and branch? First solution, trading P&L and working note la first reconciliation. Respond pa. Then working note number 2, closing stock. Maybe you can take the cost details as working note number 2. Correct? Cost particulars or margin information, markup information, and then you can take the closing stock at head office, closing stock at branch. Question number 11. Solution. Trading and profit and loss account. for the blah blah. Particulars, head office, branch, total, particulars, head office, branch, total. Balance sheet, asset, liability, head office, branch, total, assets, head office, branch, total. Working note number 1, reconciliation of head office and branch current account balances. Seven lakh. Ethics communication started, huh? Combined. Costings are completed joint product by product. Then going on. Okay, friends. It's withdrawn. Okay. So closing stock at head office. Before that, let us work out the reconciliation. Branch account showing a debit balance of 2,05,550. Head office account showing a credit balance of 1,08,00,000. Reconciliation entry in the books of head office. Goods in transit. Remittance in transit. 2. Branch account. It is 11,000. 43. Total 54,750. Everybody? Now, no entry in the books of branch. Revised balance. Revised balance. Branch account 2,05,550 minus 54,750. 1,50,800. Head office account still showing 1,50,000. Everybody? Hence reconciled. Relax. Okay. Now please sir, that's all. Over. Honias. No, over. Closing start. That is their met tone. Here different. Each gang created separate voices. Now friends, please listen. Transfer price. Just let me first apply transfer price. Everybody? Cost of head office. Let that be 100. Markup at 10%. 10. Transfer price 110. Everybody? Then we have selling price at head office, at branch. We have cost 100, 110. The margin here expressed not as a percentage of cost on head office only, respective cost plus 25%. Everybody, the last question the margin was given as for head office cost plus 80%. For branch cost of head office plus 100%. But here it is uniform percentage 25% on their respective cost. So plus markup at 25% na 25 27.5. So selling price by head office to outsiders at 125. Selling price by branch to outsiders 137.5. These are the cost particulars or the markup information. Everybody? So we find cost 100, that is a margin of 10%, 10, so 110. And in case of selling price, by head office at 125 and by branch at 137.5. Understood? So this is how we have the basic markup information. Shall we proceed, friends? Now, can I turn this page? Now listen, friends, closing stock at head office processed goods. So which can be easily determined. There is no opening stock of processed goods. So purchases of unprocessed goods 19 lakh 93,350. So rather than copying, please apply your mind, friends. Please listen. I don't want to copy here. Purchases, how much, friends? 19 lakh 93,350. Otherwise you are simply only copying. You are not applying yourself, no computation involved. Please apply your mind, may compute, understand the computation. At least 1 week later, at least that time you should be in a position to solve. 1993,350 is the purchases of unprocessed goods, raw material. Now, we want closing stock of? So thereby first we would like to convert this into processed goods, for which we incur what cost? But whether all the goods are processed, whatever you purchase processed? No, you have not processed full goods. So minus closing stock of unprocessed goods 1,80,000. This was not subject to processing. Everybody, raw material still in hand. What you have processed is 18 lakh 13,350. Only on this goods you will incur what cost? Processing cost. Understood? During this year we would have purchased for 19 lakh 93. In that 1 lakh 80 is still not processed. So balance only processed, on which only you incur processing cost. Processing cost 34. So processed goods available 18 lakh. So 18 lakh 48,000 is the goods which are available at head office. This was the total goods available, processed goods available. Opening stock not there, business just commenced. Everybody, please respond, friends. Out of this 18 lakh 48,000, some goods has been sold, some goods has been sent to the branch, and balance will be there in the closing stock. Listen carefully. So thereby, let us take sales, transfer, closing stock. Sales, transfer, closing stock. Everybody, sales of head office how much pa? 14 lakh 20,000 represents the base 100 or 110 or 125 or 137.5. 125 that. But the goods available with you is representing 100. Correct? So I want to convert in terms of 100. So it is cost of sales. It is cost of transfer. Cost of closing stock. Correct? So this 14 lakh 20,000 divided by 125 into 100. 11 lakh. Friends, follow the computation. 14 lakh 20,000 represents a base 125. I want in terms of 100. Thereby we got 11 lakh 36,000. Sir, I told you, these chapters, final accounts is so easy. But to add spice to the problem solution, we are having some missing information. Understood? Otherwise, I told you 8 to 9 item prepare in trading P&L. IPC level 8 marks, 16 mark question. So to bring to that level, we give missing information. Are you following this? So you find out, apply your mind, simple computations only. Now, cost of transfer. How much is the goods transferred? Now, 6,51,200. From my viewpoint, I have transferred 651,200. What they received is immaterial to me. I have transferred this much goods. Correct, Appa? 651. Representing 100, 110, 125, 137.5. 110. We want in terms of 100. Super. By 110 into 100. 90. Upon this cost of sales over, cost of transfer over, closing stock. 1,20,000 is the balancing figure. Everybody, so you have closing stock of processed goods. How much pa? 1,20,000. Closing stock of unprocessed goods. 1,80,000. Total closing stock, if you ask me, it is 3 lakhs. Is what our friend have conveyed. Our friend Kirti have conveyed this 3 lakhs. Very good. Closing stock at branch. Listen, friends.
Transfer is 651,200 minus 1,100.
Why should I deduct 1,100?
Because that is
11,000.
11,000.
Why should I deduct?
We made an entry.
What entry? We made one entry. What is the entry? Goods in transit to branch. It's an item that won't affect my trading account. Have I reversed the goods sent to branch? Whatever I sent is sent only now. Am I reversing that entry? That is not at all reverse. So I have booked the revenue. So that won't come in my trading account as closing stock. That will come in my balance sheet. Because of the adjustment entry made, that will come in our, but it won't come in the trading account. Because I have not reversed the sales. If I am recording a sales returns, it is okay. But I am just bringing the goods into my books, that's all. So now, goods received from head office. How much? 40,200. We find closing stock only out of this. Respond, friends. Idala sales, loss of stock, closing stock. Some people ignore that loss of stock. Out of the total goods, sales, loss of stock, closing stock. Everybody? Yes, sir. Now please listen, friends. This 6,40,200 represents 100, 110, 125, 137.5. This 6,40,200 represents 110, which is their cost. So we also want the closing stock at 110 or 100. We want at 110 only. Branch order cost price only will record. Then other profit margin is there, no? That I will find and remove in head office P&L. We will remove in unrealized profit will be removed from head office P&L. Could you appreciate that? Anyway, presently I will value the stock at 110. In branch trading account, I want the stock only at, because their cost is also 110, closing stock also should be representing 110 only. Could you appreciate that? So in that basis, sales given in the question, representing 137.5 into 110. 5 lakh 11,000. 12,000. 5 lakh 12,000. 6 lakh 40,000 divided by 137.5 into 110. 5 lakh. Loss of stock given how much pa? Representing what price is given? So divided by 137.5 into 110. 4,000. Closing stock is balancing figure, friends. 124, 200. So Kirti once again got it correct. 124, 200. Everybody? Now one more thing I would like to compute is the stock reserve, friends. Stock reserve to be considered in whose books bar? Stock reserve for head office. Now listen friends, it is 124 200 into 10 by 110. And it's a 10 by 110. 124 200 represents what price? 100 or 110 or 125? In that 110, what is the profit of head office included? 10. 100 only they transferred at 110. Correct? Everybody, head office transferring goods to the branch. 100 for, if they are sold to third parties, it is realized profit. If it is not sold, then it is called the unrealized profit. Should be eliminated from the P&L of head office. Understood, Appa? So, what is this amount? 11,290. This is on the closing stock at. Closing stock at. Then for goods in transit. 11,000 into 10 by 110. 1,000. 12,291. Shall we proceed? Now here is the place, sir. Now once this is over, I want all your attention. Adukapram blink பண்றதை விட்டுட்டு நல்லா கவனிங்க. Once again let me run through the trial balance and post item quickly. Please listen friends. First item, capital. See how capital is getting posted. இதெல்லாம் normal posting pa. But certain items டக்குன்னு you may miss out. Capital 2,20,000 nil. 2,20,000. Next, drawings 25,000 nil. 25,000. Then purchases. Listen friends, we have no opening stock. So 2 purchases 19 lakh 350. 93,350. 2 processing cost 34,000 nil. Listen friends. Next, buy sales 14 lakh 6 lakh 20 lakh. Then buy goods sent to branch 651 nil nil. To goods received from head office 640 200 nil. Next, selling. So leaving space, we are going to this place and write 2 selling expenses 2 lakh. Okay. Friends, please listen. Debtors 2 lakh 30. 3 lakh. Then creditors 5 lakh 83. 85. Next. Now listen friends. Branch current account in head office column 150. Head office current account in branch column. It is not the trial balance item because already revised. Next. Balance at bank balance 1 lakh 30 1 lakh 34 trial balance over. Now I want all your attention friends. Now only technical items comes. By abnormal loss. Nil. 4,000 3,667. That's correct. See, 4,000 represents, you know what? 110. But for overall business, the real cost is 100. So 4,000 into 3. Okay. 3637 yeah. Okay. This 4,000 represents 110 friends. I want, so thereby 4,000 into 100 by 110. 36. 2 abnormal loss. Nil. 4,000. 3636. Even if I write 4,000, net profit may be correct. Don't come and argue, sir, I didn't convert like this. I wrote only 4,000. My net profit is also correct. Anyway, because the same number only writing in credit and debit. Are you following? So don't come and argue a point that, sir, I found a new method. Understood? So please don't convey such things. Everybody? Now, to know the real margin, this stock is included in the cost of total column only at 100. It is not representing 110. But what certain books will do for want of convenience, anyway, why to confuse students, so or how to explain them, they will have sort of doubts. So thereby, books will only write 4,000 here. Understood? Let us be correct in our accounts. Here, the matching amount involved in the total column, never it is 110. Correct? This is actually elimination from the cost. So naturally should be debiting only what? 100 only. Could you appreciate that? So next. Closing stock. Please listen friends. Buy closing stock. Unprocessed goods. 1,80,000. Nil 1,80,000. Processed goods. 1,20,000. 1,24,200. 2,44,000 minus 11,291. Respond. This 124,200 is representing what? 110. I want that also only at 100. Are you following? From overall business, I cannot show this 110. For branch out of viewpoint, that is cost price. But business, that is not the cost price. Are you following? The goods available at head office or branch, it is the goods of the company, na sir. So thereby, it has to be valued at the original cost price. Understood? Of the business. You are not presenting head office separate entity, branch is separate entity. Head office and branch are single entity. Could you appreciate that? So from head office viewpoint, that is a gain to them. Branch viewpoint, that is a cost to them. Business viewpoint, that is not gain or cost. Correct? So thereby, this has to be how much? 2 lakh. 120 plus 124, 200 minus not 12,291. 11,291. 2 lakh. 32,000. 909. Now the last item, but which is highly confusing. Buy goods in transit. Goods in nil 10,000. First of all, goods in transit will not come in head office column as closing stock because it is already included in revenue of 651,200. When it is there as sales as well as closing stock, that is wrong, nonsense. Please respond, friends. This goods in transit is included in the revenue of head office. The amount which is there in the sales of one entity can't be there in the closing stock. Either it should be there in sales or it should be there in the closing stock. Please respond, friends. But this is not sales for the total business. Understood that this is not the sales for the total business. For head office viewpoint, it is only sales only. Only an adjusting entry was made in the books of head office as goods in transit to branch. Are you following? But it is booked as sales 651,200. So you don't have closing stock here. Correct? For branch anyway no entry has been made. But for overall, from overall business viewpoint, that goods is actually the stock of the business. And should not be shown at the transfer price. It should be shown only at the cost price, which is 100. Could you appreciate that? Everybody, now please listen, friends, to stock reserve. Please help me out. Stock reserve 12,291 nil. What is the stock reserve? 12,291. The profit on this 124,200 as well as this additional 11,000 sent. Correct? Though it is not there in the closing stock, but that goods has been sent, which is not sold by branch. So on that also there is unrealized profit. Total stock reserve will be 12,291 as we have computed here. This 12,291. Could you appreciate that? Please respond. This 11,000 is not shown as closing stock because it is included in the revenue. This point you should be knowing. Everybody, you can't show 11,000 here as well as in the. So please apply your mind, friends. My dear friend, you are not there in the class. One organization sending goods for 5 lakhs, sold goods 5 lakhs. The same 5 lakhs also showing in the closing stock is nonsense. Understand ba? So similarly only, so this 11,000 is included in goods sent to, totally from the beginning is off, so I can't explain now. So anyway, 6,51,200 is the goods sent to the branch, which includes even 11,000. Understood that 11,000 cannot be again recorded as closing stock. But from overall business it is closing stock. Understood? Now please listen. I think all the items over. Here next item when you write stock, processed goods. I'm sorry, unprocessed goods. 1,80,000 nil 1,80,000. Processed goods 1,20,000 124,200 2,32,909. Goods in transit 11,000 nil 10,000. Sir, suddenly why 11,000 comes here? Because that was adjusted in the books of head office. Thereby that will come in the balance sheet as an asset, but not as a charge against his trading account. Correct? Trading account it is not coming as a charge, but it comes in the balance sheet because you made one reconciliation entry, my dear friends. Because of this reconciliation entry, these two items will come in the balance sheet. Balance sheet. Asset side, reducing the branch current account balance. Could you appreciate that? So these two items certainly, not only goods in transit, one more item will come in the balance sheet. Remittance in. So because of this adjusting entry, these items affect only dash place balance sheet. It won't affect dash place trading account. Trading account, whatever happened is happened. Just for the reconciliation purpose, these adjusting entry made, which will affect only the assets and not the incomes and expenses. Could you appreciate that? These points you should be knowing, shall we? So thereby, an item which comes in the balance sheet closing stock, don't ask me why it is not coming in the trading account, because in trading account it is purely driven by incomes, and in that in 651 200 11,000 is already, but in balance sheet we are adjusting an entry for the purpose of making this branch current account balance matching with what? Head office current account. Otherwise this should have been 2,05,550. Could you appreciate that? Because of the reconciliation entry made 11,000, remittance in transit 43,750, which will be nil, and here 43,750. Could you appreciate that? So these entries you should know. Now one more thing is, this stock reserve you are creating, this is actually a provision you are creating. This is a provision, P&L to provision, which is a liability, stock reserve or provision, which will come in whose column? How much? 12,291. Nil. Nil. In total column, we have not shown anything at a loaded price. Everything is shown at the. We have reduced here itself 230 to 909. How did you get that? 120, 124, 200 minus 11,000 nil minus 1,000. That only you got this. Understood? Now all the items got posted. Can you arrive at the gross profit, friends? Correct? Pottingla? Okay. Okay. 4 lakh 545 by gross profit 343 200 1,28,000 458 545 1 lakh 909 97,000 2 lakh. This will eventually match, dear friends. Everybody, but gross profit will not match because you got different margin. Understood? So now listen carefully. 1,06,909 97,000 2,03,909. Now listen. Profit, net profit 1,06,909 97,000 2,03,909. Subtotal 3 lakh 1,000 97,000. Give a balance sheet total. Verify both the sides and only then convey the total. ஒரு சைடு சும்மா டோட்டல் பண்ணி சொல்லாத, கன்ஃபார்ம் பண்ண அப்புறம் சொல்லுங்க. $8 lakh टैक्स सर लिया लिया अकाउंट्स क्लास में
सर वाईडी இருந்தாங்க
2 lakh 9 lakh 6. So thereby you should realize this fact. Don't compare these two. Understood? Don't do the half work. Okay. Anyway, this total is over. This plus this. Don't arrive this. Next. So same. 250, 200, 984. Friends, please settle down. The issues in posting are abnormal loss that you record in the branch column should be converted into cost price to the business. Suppose this abnormal loss was in head office column. No conversion, no change, because it is already appearing at cost price. Is that clear? Closing stock, similarly, whatever physical stock available, stock which is available at the branch should be converted into cost price. Respond. There is no change for the stock at the head office. But stock at the branch includes profit margin, which should be eliminated in the total column. Total means what, pa? Overall business. Everybody. Then goods in transit should be separately accounted in which column? Total column. Because it is included in the revenue of. It is included in the revenue of head office. Respond. So the adjusting entry will not affect the trading P&L. Adjusting entry will affect only dash. Balance sheet you should be knowing. Correct, apa? Please respond, friends. Yes, the 11,000 rupees stock, it is not there in the closing stock of head office. It is not there in the closing stock of, but it is stock of the overall business. Correct? Thereby it will be separately shown, not at the invoice price, not at the transfer price, but at the cost price. That is what we are recording. Please respond. Then unrealized profit is booked as stock reserve, which is a liability for head office. P&L to provision. Respond. Should come in the P&L debit as well as in the liability side. Everybody should come in the P&L debit as well as in the liability side. That provision that you create. Now listen. This stock reserve what you created, no? For which stock? Closing stock? This should become the profit in the next year, correct? So in the next year when you prepare P&L, the stock reserve should be credited in P&L. Again closing stock reserve be found out and debited in P&L. Understood? These activities you should be doing, correct? Everybody. But stock reserve item only come in which column? Not coming in? Not coming in? Because for business there is no concept of unrealized profit. For business they have recorded only the items at dash price. So only when you record the loaded price you are going to get the unrealized profit. Understood? These points only you should be knowing, and accordingly you should make it. So one thing, that the reconciliation entry shall affect only dash. It shouldn't affect dash. Trading P&L, that's point only you should be knowing. Clear? Pakka? Question number 12, page number 119. Break la venda panna. 1:30 break. Okay. 1:15. AB and Co. commenced a business on 1/1/2014 with a head office and one branch. On 31st December 2014, goods are purchased by head office and are normally packed immediately. And on 31st December 2014, goods costing rupees 2,500 remains unpacked. The cost of packing materials amounted to 1% of selling price, and there was no loss or wastage. Only packed goods are sent to the branch and are charged at selling price less 10%. The following trial balance on 31st December 2014 were extracted before adjusting the above. Capital, drawings, purchases, goods from head office, packing materials, sales, packed goods sent to the branch, selling expenses, debtors, creditors, current accounts of head office and branch, bank balance. Sales by head office were at uniform gross profit after charging packing materials of 20% on a fixed selling price. All branch sales were at fixed selling price. Goods invoiced and dispatched by head office to branch in December 2014 for rupees 2,700 were not received until January 2013. A remittance of rupees 800 from branch in December 2014 to head office was not received in 2014. Branch stock taking disclosed a shortage of goods of a selling value of rupees 250. Branch stock of a selling value of 1000 had been damaged, necessitating their value for stock purpose being reduced by rupees 545 below invoice price to the branch. Head office agreed to allow the branch a credit of rupees 160 against these goods. Apart from this, all stock are to be valued at cost. Prepare trading and P&L account and balance sheet for whole business in columnar form. This is the requirement of the question. Kindly go through the question once again. Thank you. Thank you. Please go through the question once again, friends.